360. I'm Marley Caden. It's time for the big three. We've got 3 stocks, 3 charts, and 3 trades for you. Rick Ducat, of course, will be taking us through the charts. Here to take us through his trades today, Jason Brown, stock market expert at thebrownreport.com and the author of 5-Year Millionaire. Jason, great to have you back on the show. It's been a week since we last talked, so I'd love to get your thoughts on the action that we've seen since then.
Yeah, Marley, always good to see you. Rick, good to see you as well. I think we're seeing a normal pullback in the market after a strong run up, and the market's not weak yet, but it's definitely looking stretched. As you know, in these times, I'm wearing the shirt today. I think it's a you never go broke, taking a profit type of market. We've had a really good run up. I think you're seeing some people take some profit, take some chips off the table, and it's time to be slightly cautious, not bearish, just slightly cautious.
I'm so glad that you read out your shirt for us because your lower third with your name on it was covering the bottom half. And I was like, you never go broke doing what? Well, thank you. Perfect. You never go broke taking a profit. We've certainly seen some of that so far this morning. But let's talk about your first pick here in the big three. You've got the Consumer Staples ETF. You've got XLP, the top 3 right now in XLP, Walmart, Costco, Procter and Gamble. So, Jason, take us through your outlook here.
Yeah, what I like about Walmart, Procter Gamble, Costco is you see that these are great companies. They had pretty decent earnings and they're pulling back to a support level. And so I'm looking at this as more of a safety rotational trade. So instead of trying to pick the individual stocks, I like the overall sector, the XLP, the consumer staples of the S&P 500. You can kind of see where they pulled back, and it makes sense because people rotated out of safety and rotated into the tech stocks as they had a rally. But now that tech stocks are trading at all-time highs, you're also seeing companies like Micron that reported, Broadcom, and the stocks are off 80 points, 100 points, getting smacked down. You got that volatility coming back. I see people considering, or at least they should be thinking about, taking profits from over in the tech sector and then rolling back into safety stocks that are good names that are pulled back to a decent support level. And I think that's what you get with the XLP. You got some great names, they pulled back to support, and then you got diversification versus stock picking. You get a basket of some of the best consumer staples inside this ETF.
All right, Rick, so let's take a look at the technicals here on the consumer staples in the XLP and this pullback that Jason just highlighted. When you look at the setup of the chart, which hopefully we can get pulled up here, there we go. What are you seeing here? I mean, I'm definitely seeing a little bit more range-bound activity of late than we saw in the earlier half of the year.
Yeah, more of a defensive sector here, almost unchanged during the past year here, but we are up about 9.6% off these lows that we carved out here, 75.16, excuse me. So we had our high points here, 90.14. From there, we have established this downward trend line here, but you also could point to this series of successively higher lows after stabilizing here near 80.50. So that gives us, perhaps in the bigger picture, more of a triangular type shape. But really, I think I would agree that it's more range bound, because what we had here was a gap down that established a more consistent ceiling near 86.50. Then that gives us a gap level to watch near 87. So a convenient resistance zone to think about going forward. Relative lows come in 81.50. Another gap formed here near 84.50 or so. 81.50 to 84.50, excuse me. So now if we think about our moving averages here, we have solidified at our 251-day EMA, our long-term yearly EMA in orange. Notice that it was pretty supportive recently as well, too. We did have some fluctuations beyond it, but we had a bounce off of this area here. It was stopped short at the confluence of our 21 and 63-day EMAs near 83.50. That's our monthly and quarterly EMAs in teal and gold respectively. So that's another potential resistance point. RSI trending lower. We are below the 50 midline. 41.40 is where we come in right now. We are coming pretty close to invalidating that trend line, though. So look for price to break above some of these levels, and also for RSI to follow suit. Our volume profile study shows that we did attempt to break out to the upside today from our point of control, the heaviest trading area of all, our thick red line there near 82, but not quite making a solid move above that area yet here. The next most important volume area to the upside is around 85. That's another smaller node that traders may have their eye on going forward.
Yeah, and right now we're priced right in the middle of that heaviest volume area. We're at 82.25. So, Jason, as you would look to trade this name, how would you do that?
Yeah, so as you guys pointed out, it's in a range, but that's what you like to see as a trader. I like to call it a predictable, repeatable pattern. And so you believe that the stock can get back up to the $85 range. You know that that 81, 82 is holding that support. It's also noted that it also bounced off the 200-day moving average about 2 or 3 times right there. So I like that you have a defined support level that looks like money comes in and props it up. So I'm looking at the December 18th, 2026 strike expiration date, 80 strike price. You're going to pay about $6.10 for that debit. It may be a little bit lower now that the stock is down, now that the market is open, but your break even should be around that $85 area, $86 area. Obviously, if we can get back there before December, you're going to be in the money from an intrinsic standpoint. So the time value left of the option should be profit. Plus, you also have a safety mechanism where you can sell out of the money call option and turn it into a bull call spread if you wanted to. So I like that we kind of have a couple different ways that we could play this if we want to modify the trade down the road.
All right, so right now we're just a little bit below. We're at 82.25, a little below that 85 level that you highlighted here. But your next one here, we're looking at Comcast, and they've had a bit of a tough chart so far year to date. Also over the last year or so, they're down more than 15% year to date, down about more than 25 over the last 52 weeks here. So take us through Comcast, Jason.
So when I look at a company like Comcast, or I look for a bearish trade alternative, I start to ask myself, what is the catalyst that's going to make this company go higher from a fundamental standpoint? And then I also look at the charts and look at the technicals and say, what is the trend telling me? When you look at the fundamentals of Comcast, they're a cable, a media communication company, and every portion of their business is being challenged right now. You got to think they no longer own CNBC, so their financial network is no longer part of the Comcast family. You got people cutting the cord from cable TV. When you take a look at big sports, some of the biggest games during the NBA season, the playoff, was on Amazon. So it wasn't even on a cable network. You had to have an Amazon Prime subscription to even watch it. So big TV is being challenged. Then you on their recent earnings report, they shared that they lost about 322,000 domestic video customers in Q1. So that's 322,000 people that said, maybe we don't necessarily need TV, or they're going direct and paying for a la carte services. But here's the kicker on their broadband side, because you figure at least to still watch TV and these streaming platforms, you need high-speed internet. They lost about 65,000 net residential broadband commercials. So again, now their broadband, which is their initial business line that they came off of, that recurring subscribers say, hey, we at least have to have internet. That's being challenged. Then you have SpaceX and Starlink starting to provide cable satellite services. We're in this environment where people coming off the pandemic are more mobile, are more remote. And so they can opt for a Starlink and take it anywhere that they go and have high-speed internet and not necessarily be tied down to Comcast cable. So their business is being challenged. So I think the stock has more downside to go. It's also been in a long-term downtrend since September 2021. So you're talking about 5 years of the stock just increasingly going down. And I just don't really see where it's going to get better.
Yeah, I mean, as you said that, I pulled up the 5-year chart while you were talking. I mean, it's a pretty consistent descent to the lows that we're just off of right now. I mean, only about 20 cents off of the lows. So, Rick, as you look at the setup here, I mean, you can see this descent, even though this is just the 1-year chart. What are you seeing?
A quick thought, too. I mean, they're going to have to switch to fiber optics eventually, too, to keep up with the pace of the broadband landscape here. So just another thing to think about. That's a significant transition as well. As you said, though, a downswing that we've seen very sharp recently. We had a more gradual downward trend line here, but it's really accelerated after earnings here. Really a difficult price activity there. If you were bullish in that name, it looked like perhaps we were going to stabilize at this level here, 27.60 or so, but it was not to be. Another collapse took place that took us below these previous 52-week lows that we saw, 24.13. Now that stands out as where we are stuck as a resistance level. 23.43 is our new low to consider. Another point to watch, if you were looking for some kind of bounce here, 25.85 was a relative high that we saw during our rising wedge or falling wedge type of price pattern here. Falling wedge here. Typically, this is more of a bullish type of setup. setup here, but not exactly encouraging price action to say the least. RSI entering the oversold area, that threshold below 30, typically regarded as a sign of further weakness to come in a trending market here. So that entry there is more of a bearish signal again. We are stuck below our 5-day weekly dark blue EMA near 24. Our moving averages are all diverging farther apart from each other. Price is below all of them. Not really any signs of trend change from that metric just yet either. So our volume profile study also reveals some more bearish information here. We had a pretty large node at these low levels that correspond with our range-bound activity before our breakdown between about 2480 to 2580. Heavy volume at a low level is often interpreted as a sign of being a fairly significant low point here. So now that we've given that up, that stands out as potential resistance as well. So around 25 to 26 would be the hurdle to clear.
All right, right now we're at 23.62. So Jason, as you would look to trade Comcast, I already know you're bearish. How would you structure a trade here?
Yeah, there's a couple ways you can structure it, but the one I picked for this one, September 18th, 2026. I'm looking at the 27.50 strike price put. You're going to pay about $4.75 for that. If the stock is below 22.75, that's your break even. It's just about $1 below where it's at right now. You got 106 days. I see the stock potentially going down to $20. If things get worse, you can see it probably fall possibly to the $18 range, which I think would provide a decent amount of profit for the stock. But I think the most important thing is the fundamental story is not there. There's not a real reason why investors or traders would pile back into the stock bullish, which is why I think it may just continue to bleed out slowly down to the $20 and $18 level. And then finally, additionally, you know, my I'm wrong level for this is trapped below the 10-day moving average. If for some reason some bullish momentum gets lit underneath this stock and it turns around, if it breaks above the 10-day moving average, you want to close it out and take a small loss. And then last but not least, you also could turn this into a bear put spread. So you do the spread that we talked about with the 27.50 strike price, but then you can also sell the 22.50 put and turn it into a bear put spread and bring in $1.40. So you can adjust the trade if you feel like you might need some insurance, you know, in the next 2-3 weeks if momentum starts to change.
All right, and your last one in a totally different sector here, we're talking about Ulta. They had some nice results. They had strong Q1 results. They had some good full-year guidance here. So walk us through this. I mean, they are still down year to date, but they did have strong first quarter results.
Absolutely. I don't personally shop at Ulta, but I'm sure all the ladies watching this will affirm that beauty is alive and well. And although you might cut back on your driving because gas prices are high, you are not going to cut back on the skincare routine, the makeup, all the beauty products. So I love Ulta because it becomes a way and a part of your life. It's something that you have to have. It makes you feel good, it makes you look good. And then when you look at the numbers, speaking of looking good, net sales was up 3.16 billion, which is 11% up year over year. Gross margins were up 40%. Operating income up 11%. So from the numbers, everything was great. There was a beat, but the market just kind of, you know, shrugged its shoulders at the numbers. And that's what I like to see. If a stock sells off a good quarter, but the fundamental story is still there and the numbers are there, this just looks like an opportunity to me. So we had a breakout and a runaway of the stock back in May of 2025. And now we have a pullback to that very support level, which it was previous resistance. Now it's acting as support. So if we can hold, you know, where we're currently at, we could potentially run up to 570. Not immediately, but if this level holds, I think we see some upside here with Ulta Beauty.
All right, well, we're looking for some pretty significant upside there, $100 higher, a little bit more than that of where we are right now, Rick. But I'm seeing a downward sloping channel and the line starting to converge. So take us through the technicals here.
Right, so that would be a wedge type shape here, a falling wedge where our lines are converging toward each other. One thing that I do see that stands out as perhaps a bit more of a positive outlook so far is that we have not yet breached our double bottom lows that we established there near 440 452 almost a year ago. We did have this gap to the downside, 480 to 493, that stands out as a potential resistance zone. We did also breach our recent lows here, but we haven't kind of crossed that threshold of our extreme lows just quite yet here. So when we do look at that 493 level as well, we can see that it matches up with a notable low close and another extreme intraday low here, as well as a breakdown point before we did hit that gap. So that stands out as an interesting area to watch. 576 also low point after a gap to the upside, high point after a gap to the downside, and then another failure point of resistance there. So if we were to get kind of that 100 move up, point move up, as you said, that would be an area where I might start to really take notice if we did get a strong rally such as that. We can see now that our moving averages as well, we are below all of them. They're all starting to diverge farther apart still. Our 5-day EMA comes in at 482.79 for now. So if we do start to get a bullish move to the upside, look for it to start crossing above some of these potential areas and for the slope of these lines to start shifting to the upside. RSI also remaining above our oversold threshold here of 30. So that gives us a small amount of bullish divergence here developing potentially, because price is on pace for a lower close, but RSI is actually trending a bit upward here. So that can be a sign of some steam building up in the name and of momentum potentially improving. So volume profile, again, we have a node here near about 467 to 480. We are just a little bit below that level here. So look for the bulls to fight their way back up. 510 to 536 stands out as the next most important area by far here. And also our point of control comes in at 521. So those would be notable areas to the upside from a volume perspective as well.
All right. And Jason, as you're looking for this breakout to the upside here from Ulta, how much time are you giving yourself in this trade?
Well, here's the beauty about it. Yes, it could potentially move $100, but as a trader, you want to put yourself in a position where you win even if it does not move $100. So sometimes it's not about where it will go, it's about where it won't go. So the way I'm structuring this trade is a bull put spread. So I'm looking at buying or selling the 425 put for about 650 and then buying the 415 put for about 450. So when you think about the spread there, it's a $10 spread and you're getting about a $2 credit. So you have the potential for a 20% return in a relatively short period of time. Now, with you look at the downside, selling the 425 stock, when I looked at it, was at about 467. Right now, it's about 464. You also have 42 points to the downside that it can still fall before this trade ever comes into potentially being threatened or in trouble. So I like that we have a $42 downside protection plus the $2 credit. And then if it starts to head up towards that 100-point rebound, again, not maybe today or in a week, but starts to mosey its way back up there, great. It's further away from us getting called out or exercised on this trade. And so we win if the stock goes up. We win if the stock goes sideways. We even win if the stock falls as much as $42. So I like being in that position. Obviously, the I'm wrong level, if we get down to about 425, again, that $2 credit will kick in and gives us a little bit of cushion down to 423, but that's where we want to start to ask ourselves, do we want to shut this down early or consider ourselves wrong on this trade?
Yeah, I mean, we're still $40 north of that right now, too, so pretty wide range there. But, Jason, really appreciate you being with us today for the Big Three. Jason Brown and, of course, Rick Ducat for breaking down the technicals for us. Coming up next, we're going to spotlight the larger tech trade with Kevin Davitt from NASDAQ. We'll dive into why